Hi, it's Keith Fitz-Gerald. As you know, I've been concerned about the possibility of a correction, right? However slight. And as I've repeatedly said, that wouldn't be because of the markets themselves. Now, this morning certainly qualifies, right? All three indices are down as I type as global traders reset risk in keeping with Iran's latest posturing. And I'll have more on that in a moment. Oil has jumped too. Now, meanwhile, what I want you to do is keep your eye on the upside because that's where the real action takes place. So it makes all sorts of sense, pardon the pun, to play to that idea. Anyway, there have been 1,044 rolling 5-year periods since 1926. The S&P 500 has made money 87.5% of the time. There have been 984 rolling 10-year periods since 1926, and the S&P 500 made money 94.1% of the time. And here's the real eye-opener. There have been 864 rolling 20-year periods since 1926, and the S&P 500 has made money 100% of the time. Of course, the yeah, but crowd will naturally take issue with this, but that's nothing new. Never is. My point stands. Short-term fear always makes long-term opportunity cheaper, and that's what you want to focus on. So here's my playbook today. Number one, the most important thing in markets this week. The super sharp Stuart Varney kindly invited me back to his show this morning and asked me what this week in the markets is really about and where I see him headed next. Hint, it's not the Fed, earnings, or AI. You can watch that video elsewhere on my channel. I hope you do. Stuart also very kindly asked me about Fitz, aka the Fitz-Gerald must-have portfolio, ticker FITZ, which launched last week in case you haven't seen it. Number two today, 50 times bigger than the dot-com. Now, I thought I used big numbers, but this takes the cake. SoftBank's Masayoshi-san sat down with CNBC in Paris and said this week something worth writing down. The AI revolution is, and I'm quoting here, 50 times bigger than the dot-com bomb, right? That would mean we're talking about a wealth creation somewhere in the neighborhood of $250 trillion. To put that into context, the total value of the global stock markets today is 148 trillion. Now, I've been saying AI may just be the largest investment opportunity recorded in human history for a number of years. And that brain cramp is, of course, increasingly becoming the market narrative. There's a fun clip of me on CNBC, which you can watch elsewhere on the channel too. But here's the part Wall Street is just can't fathom. Like me, Sun isn't worried about a correction, but expecting one. And also like me, he's calling it the best buying opportunity he's ever seen. Now, hopefully you've got this covered with your own investing because odds are good you will not get a second chance for decades. Perhaps not in your lifetime. Now, if you don't have this covered and you'd like some help, thousands of investors regularly tell me that what they've learned as a member of the OBA family, one bar head family, has changed their lives. It's given them confidence needed to invest calmly and consistently. And perhaps you'll find that helpful too. All right, number three today, Nvidia just made the move that Intel should have made. Nvidia CEO Jensen Huang walked on stage in Taipei this morning and he said, Nvidia is reimagining the PC, quote, for the first time in 40 years. He isn't kidding. In fact, I think he's understating things. The RTX Spark is Nvidia's first consumer PC chip in decades, and it's a ginormous deal because it's a CPU, a GPU, and an AI processor all in one chip. Now, this matters because it can run massive AI models locally on your device, something I have been laser focused on for a long time. No cloud, no subscription, your data stays put. It's private. And now, over 30 laptop and 10 desktop makers are apparently already lined up for this fall. Now, Huang's vision and mine is simple. Your PC stops being a tool you operate and starts being a teammate that works for you, and AI agents handling your inbox, your creative work, your code, running entirely on your device in your own hands. Now, NVIDIA, of course, has returned 890.65% since I brought it to the OBA's family attention, compared to 80% from the S&P 500. That means a $1,000 NVIDIA investment back then would be worth 9,900 something today. But the same 1,000 put in an S&P index fund would be worth 1,800 or so today. Now, don't forget my fruity computer maker, my favorite one, has 2.5 billion installed devices, the largest consumer database in history, consumer operating base in history, and they too are working on bringing AI down out of the cloud. So, Keith's investing tip, I'm often asked if a 0.075 management fee is worth it when investors tell me they can put their money in an S&P 500 fund for 0.3%. Well, in cases like this, I can give you $8,102.20 reasons why. So do yourself a favor. The problem is never the fees, but how you're thinking about them. So don't be penny wise and pound foolish, as the old expression goes. The right managers can more than be worth it. Anyway, number 4, everybody hates housing, but Berkshire just wrote a $6.8 billion check. Now, Warren Buffett has made an art form of buying when others can't stand it. Now, his protege and newly seated CEO, Greg Abel, has taken a page from that playbook. Now, I can't say I'm surprised to learn that Berkshire Hathaway is making a run at Taylor Morrison Home in a deal worth just under $7 billion. I'm not surprised. In fact, I think very similar because one of my mentors used to refer to putting your money on the table when everybody else is looking scared, buying at points of massive pessimism. That's what he called it. Now, the thesis is very simple. Berkshire has always wanted to own the picks and shovels in any industry and prefers to buy when the chips are down for the simple reason that they won't be down one day. Anyway, think about it. Keys investing tip in this department. I am frequently asked about hot stocks, but in a situation like this, that's very definitely the wrong question. Like Buffett, Templeton, and Mobius, I'd rather own the stuff that's going to be there when people need it to be there. And 5, 9 today, bears are positively going to hate the chart I have to share with you in the written version. The bears love to tell you the sky is falling and they have no end of creative ways to do it. Me, I'd rather focus on the data like this little tidbit. The average bull market since World War II has been 3.6 years in the making, but critically, the average duration of bull markets that have made it this far, where the S&P 500 is today, have made it an average of 7.1 years. By the way, 4.7 started in October, just like the current one did. My point being is the current bull market could be barely one half the way to the finish line if it follows prior bull market history. There's an image in the written version that'll drive this point home. Investing in optimism is always better over time than cowering in fear at moments in time. So buy the best, ignore the rest. You know how that works. Bottom line, there will be more profits created in the next 10 years than the last 50 combined. And aligning your money with where the world is going has never been more important, or in my opinion, potentially more profitable. So now, and as always, let's make it a great day. Start the week strong. You got this. And I'll see you again tomorrow. Thanks for watching.